Good morning, everybody. Hey, welcome to Friday. It's hard to believe, July 21st. This year, this month, flying by like crazy. Glad you're able to join us today as we head into the weekend. Yesterday, again, a good day on Wall Street. We'll talk about that and more when Dave joins us here in just a second. Before we do, though, I want to remind you that there are so many things in this world that we just cannot control. However, you can take some control of your retirement portfolio by understanding the amount of risk you have in your current portfolio and how it really lines up with the amount of risk you should have in your portfolio. All this is why I created the core retirement design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design. And with that, we've got Dave coming up next.
Light FM, Corrine Bailey Ray is there. Morning Dave is here. It's 8:43. Time to check in on your money and find out what's happening on Wall Street this morning. For everything but the Dow, I can give you a tease and say it's a little better than it was yesterday. Let's check in with Phillip Statler from Statler Financial Services and see what's going on in his world this morning. Phillip, how are you today?
Good morning, Dave. Hey, doing okay today. I hope you are as well as we close this week out. It's yesterday, not a bad day though.
No, it wasn't terrible. I mean, let's see here. Yesterday, the Dow went up by 164 points. That was good. Standard & Poor's off by about 31, and you can probably tell the tail of the tape by the price-weighted NASDAQ index. It was down 295 points, and I think we can probably assume Tesla and NASDAQ pretty much weighed that index down and dragged all the tech down a little bit yesterday. Is that a fair guess?
Yeah, Tesla and Netflix definitely did. Now, I will say this, though, and this is what I guess caught my attention. I'd kind of forgotten about the Dow falling like that. I mean, the NASDAQ falling like that. But the Dow, it actually has had the most up days since, I think, 2017.
Which is kind of interesting, given the fact that among the big exchanges on year-to-date gains, it's actually the laggard of the three, but it's going up by and large. Well, what I always say is a nice day when it goes up, like 1/3% at a time. The little numbers, we haven't had the wild swings on the Dow, but that's interesting. I didn't know that it had done that well.
Yeah, I think it's like 14 days in a row or something. It's something like that in that neighborhood. So it's the longest up streak it's had since 2017.
Cool. I guess that's kind of a slow-speed flight to safety, I guess. Huh?
Yeah.
Could very well be. Hey, big news this morning. I'll bet you didn't realize this. The COVID pandemic is over. Government put out the figure that excess deaths from the National Mortality Database a couple of months ago actually fell below that which would normally be expected, and they say that means the COVID pandemic is over. So, folks, go out and spend money. You're safe. When you breathe on somebody else, the odds are you're not going to kill them. The other bit of news, and we were gabbing about this, and it kind of killed up our prep time before we went on the air. The Federal Reserve yesterday announced the advent of Fed Now. If you're sick of Zelle and you're sick of PayPal and you're sick of all the other ways to pay your bill, you can have the government do it for you. Now, doesn't that give you a sense of security and good feelings?
Oh, me, the cynic of Dave comes out. It's it'd be interesting to see why. Is there a cost savings? Is there if it saves the individual money, then that'd be good. But if it takes business away from the banks, then that's probably not good.
Well, that's kind of the part that hits me. I mean, Zelle is a co-op between banks. They launched it as being an alternative to some of the other direct transfer mechanisms, and it's a private enterprise, makes a nickel or two for the banks, and it saves them money on paperwork. That's the reason they all want us to pay our bills electronically, because it saves them an awful lot of paperwork and labor. But, is this something that the Fed ought to be doing going into competition with private industry? Now, I don't know where the benefits are. They say it could be an instant transfer, and you and I were talking about, I'm annoyed by the people I pay my car payment to because it takes like 2 weeks for them to actually post the payment. I send them by bill pay. But I still look at the notion and say, okay, what's the point? I don't get it.
Yeah, exactly. And so it's maybe progress, Dave. Maybe it's just progress moving forward.
Progress is not always a good thing, Philip.
I would agree with you there. I would agree with you there.
Hey, getting back to stuff that really matters, that really does affect our money, we had the June home sales out yesterday, and I don't have the exact number, but I do read that it was the slowest pace since 2009. That's not good news.
Actually, the June home sales dropped to the slowest pace in 14 years. I guess that'd be about 2009, wouldn't it?
Yeah, 2009,
Um,
14 dang years.
yeah, just and not because prices are going up, but just because the inventory, there's not the homes on the market to sell. So down 18.9% from last year June numbers. That's a pretty big drop.
And that's kind of interesting because that dovetails something you and I were looking at when we got new home construction and all of that. But we flippantly said, but I think it's actually accurate, can't find a home that matches you, just say the heck with it and go ahead and build a new one. And that's increasing new construction sales.
Yeah, it is. It's definitely doing that right now for sure. And so, but it is, and that's why we saw DR Horton report yesterday, and their revenues up, their earnings are up because they're building tracks and tracks and tracks of new homes.
Yeah, and there's a pile in some of the subdivisions around here that are going on. I live at Sun and Lake, and there's a great big new track of homes planned to go up there as well. It makes things interesting, and it's an interesting warp on the market that actually, given the fact that it's an inventory issue, probably is good for the economy because it's kind of generating new home construction, which we kind of sort of need right now.
Well, yeah, we do. I found this interesting. The median price of an existing home sold in June, $410,000.
Yeah, I'm old. I'm old enough. I remember my parents bought their retirement home, their dream home, put it on a double-sized lot. This is back in 1960, and Dad was just absolutely hornswoggled of the fact that that great big home that he bought cost him $30,000 to build. What a difference! What a difference 60 years makes. Well, anyway, got some columnists that are talking after yesterday's bloodbath on NASDAQ that the tech rally is over. There's chinks in the armor. Everything's terrible. And then columnist number 2 says overbought does not mean sell. There's a lot of room for the bull market to grow. So one more sidebar point to don't always believe the columnists because you can always find 5 different viewpoints in every event, right?
Oh, that's right. I mean, definitely in this business, that's for sure. Everybody's got an opinion. And for every one you find that goes one way, you'll find one that goes the other way. So it's, yeah, you have to kind of read between all the lines.
Oh, yeah, and the lines sometimes are really, really blurred. One stock that could be interesting to watch is Mattel. They're up big time this year, and the Barbie movie opens up this weekend. You think they're going to sell a few more dolls after this weekend?
Yeah, I bet they will. I bet they will. That'll just hopefully drive sales up for them.
The showbiz drives the toy industry. In case people can't tell, there aren't any major government reports coming out this morning, so we're doing tidbits. But earnings season does continue, and we've got a couple of household names. I got one of these in my wallet, American Express. So they're going to stay in business for a few more months?
I think they'll hang in there, though. They did have a mixed quarter. They posted smaller than expected revenue for this last quarter, even though their earnings beat by, I don't know, 8 cents a share. But revenue was a miss for them. They are down almost 4% this morning.
I'm
Yeah.
sorry, guys. I'm still not going to carry a balance. You can take your interest rates and cram them.
Then we had Capital One. I mean, if we're staying with the financial industry, Capital One came out. They posted better than expected earnings for this last quarter. Revenue was pretty close. They missed by just a little bit. Deposits are down 2% for the second quarter, which that's something banks kind of measure. They're trading up 1.3% today.
That may explain all the emails I'm getting pushing opening up a checking account with Capital One, and I'm wondering why.
Go.
That might explain it. They need deposits.
Yesterday we talked about, I think it was yesterday, the day before, we talked about transportation, trucking company. Well, today we have CSX reported. They missed revenue expectations. But they earned 49 cents a share. They were falling earlier. Let's see where we are now. They're down about 3.6% right now. So they're falling off a little bit, which is kind of in line with what we saw with the other transportation company. And then we had Knight Swift Transportation as well. I think they're another trucking company. They had lower than expected earnings for this last quarter. They issued weak guidance for the current quarter. And obviously that's putting some pressure on them. They're down 2.2% this morning. So that's kind of the transportation industry. It's taking a little bit of a hit here lately. We talk sometimes about cars and that automotive and manufacturing. And so AutoNation reported they beat expectations the second quarter across the board, but they're trading down. At least they were trading down. I'm not sure exactly why. Well, they've come back up a little bit. They're actually up 0.6% now. So I guess they slid a little bit this morning and people decided it wasn't necessary and started buying it back up. So that's kind of where we're sitting on earnings.
Now, I wonder what AutoNation's guidance looked like, because I got to believe with accelerating interest rates on auto financing, it not bubble by any measure, but it's got to be a little bit more challenging at the very least for one of those big companies like that.
I would think so. I would think that would start to be a little bit of a deal. And now the interest rates, I mean, they've been dealing with it for over a year now. You would think that that they would have some way figured out. Obviously them in the RV industry, I think are both, this interest rate hikes have got to be putting some pressure on them.
Oh yeah, challenging times without a doubt. Resetting the table, we had a good day on the blue chips, not such a good day on the growth stocks yesterday. 45 minutes before we open, what are we looking at today?
And we've got some green ink across the indexes today, Dave. The Dow Jones Industrial 30 is up almost 0.3%. S&P 500 is up almost 0.5% or 0.5%, and the Nasdaq 100 is up 0.7%. So we're seeing some green ink across the board there. Looking at the other side of the coin, though, silver dropped almost 0.2%, down below 25 to $24.92 an ounce for silver right now. Gold's down about 0.3%, down to $1,965 an ounce. And the one we want to go down isn't, Dave. Crude oil up 1.4%, up on a little over $1 from where it was yesterday. It's $76.71 a barrel.
Well, I think that was the night close. Seems to me the morning quote was over 77 by a couple of pennies yesterday morning.
It could have been.
I'll take the day by day improvement. I'm just looking for a silver lining to that gray cloud. Overseas markets, with the tech stock difficulties we had yesterday, no big surprise. We had a mixed bag in the Asian rim. The mainland Chinese market off by a little bit, Taiwanese market off by quite a bit, and the Japanese market off by somewhere in the middle, about 0.5%. Europe mostly up this morning by maybe 1/3% on average across the board over the European community. Getting a plan to get a retirement together sometimes means if you're in love with growth stocks, that's not where you want to be if you're getting close to retirement. Might be if you're younger. That takes a pro pair of eyes to get that plan going, though. How do I find you to get that plan?
Yeah, that's exactly why we created the Core Retirement Design, to help people put together a plan that will get them into and through retirement. Give us a call at 863-382-0037 to schedule your Core Retirement Design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And we'll do it again on Monday morning, see what happened over the weekend, what's pointing at the direction we're heading for next week, about the same time. Fair enough?
Fair enough, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I hope you have a great week and a great weekend. Join us again Monday, same time, same place. Until then, have a great one.